Music Production.
Alright, my friends, here's a scoop. We're going to look at the overall markets. We're going to get a nice big picture look at what is going on, what we could potentially expect, and the mindset that we should have right now. I'm also going to pull this up real quick because I feel like this will be important. But we'll look at that in a bit. Alright, so we got the S&P 500. This is the monthly time frame. I've erased all support and resistance zones. We're just looking at basic facts right now. We're not going to assume. We're just looking at what has happened and how that could help us kind of get an idea of like what could potentially happen from that. Could we expect something similar, right? So when we look at the S&P 500, and we're going to put on some of the moving averages. We'll use the 20 moving average first. What has happened is it likes to use the 20 moving average as a support. And then once we break below it, and we stay there for a long period of time. When I mean a long period of time, I mean more than 2 to 3 months. What happens is it triggers a huge downfall, right? So we haven't really had that since 2008 on the S&P. Right after this 2008 financial crisis, whatever happened, we dropped significantly. And this took like over a year's time. Keep that in mind. So it was November 2007 to, we'll say, March 2009. So that's about a year and 4 months, a year and 3 months. That's a long time. Right, and that's what happens. We broke below this 20, so let's keep that in mind. We're just breaking below this 20 right now. So we need this month of May to finish to see if we do close below the 20 moving average. Now, when we look at the 8 moving average, it's a little bit more, we could say, useful at this point in time, just because it has gotten a lot more respect on both the bullish and the bearish points of view. Now, when we get under the 8, it shows that when we stay under the 8 for a while, it triggers a big downfall. So we had 2 to 3 months here. This was overall in the markets a 20% drawback over 3, 4, 5 months, and then we recovered. Anytime we break below, it's 2-3 months, 2-3 months. Over here in 2008, keep in mind the fundamentals of the market. Like, it's literally a financial housing crisis. That's big. But otherwise, we've really liked this 8 EMA. We'll go under it, and that's kind of been like a buy signal. But what we're going on here is, right, like we got to start thinking, is there potentially another financial crisis about to happen? Like, we got to start thinking about that stuff. And the only reason why I kind of want to think of it is because now I'm going to bring up that chart. It's because I live in Canada. And this is probably the most sketchy chart I've ever seen ever. But, like, you never see people's wages increase. You never really see people overall, like, from an average of, like, all Canadians or all Americans. You don't really see people's disposable income or their financial situation really improve, right? But housing prices have been absolutely skyrocketing, especially when you look at Canadian housing prices, which is like, holy shit, man. Like, Canadian housing prices compared to our disposable income it's concerning in a way. And if you just think about, like, I would have this conversation with one of my buddies, Felix, good friend of mine. And low key, this guy has been like warning about this for a while now. Like, I remember him talking about this late 2020, early 2021. And he started talking about how, hey, dude, like, don't you remember, like, when you were like 16, what the housing prices were? And they were like dirt cheap. Like, probably the average around Hamilton, like Niagara, GTA region was probably around maybe like 2 to 300,000. Where now, like, the average is like 800,000. I feel like, yo, like, let's just assume, right? And I want to assume a pessimistic thought. This isn't like me. It really isn't. But let's assume that there's going to be a financial crisis coming. What do you think is going to happen with this chart? Like, I think we might get something. It's not going to, of course, the markets never do the exact same thing. But what we're going to be looking for is this about to happen for probably a solid 8 to 12 months, maybe even more. So let's just take a look here, right? We've broken below this monthly 8 EMA. Now, what we need to pay attention to is that if this 8 EMA continues to the downside like this, are we going to reject it? That's huge, right? Like, we need to start paying attention to, are we potentially going to come up, get a nice bounce, but reject it and continue the downtrend? And this might happen, who knows, until 2023. And then we get some sort of a bottoming down here where we get something like that, right? I don't know what's going to happen. I'm trying to prepare myself wisely. So when I think of that, I assume that there's a negative scenario going on around the world. This is how I'm trying to prepare myself. So what is the mindset that we should have? Like, if that's going to happen, right? There's really not much bullish things going on in the world. Like, we have this potential financial crisis, housing prices, both in America and Canada, outrageous. Croatia, Russia news is just, there's really nothing good going on over there right now. Gas prices through the roof. We're pretty much about to enter a recession. Yo, how much more bearish news can we get? So if there is a crash coming, and if there is, this is how I want to be prepared mentally and by looking at the charts. Mentally, I don't want to be trading right now, that's for sure, unless I'm a bear, but I'm not a bear. So for me, it's just sit back and relax. Now, I'm doing as much research as I can on my free time on companies that I feel like are going to make it out of this recession strong as fuck. So that's important, because after this year and a half of bearish price action, you want to have the stocks that are going to outperform not only during that time, but after too. Right? So that's the mentality I'm trying to have right now. I'm not looking for trades. I'm looking for long-term companies that are going to make it out of a recession. So let's also look at the chart, right? This is like right before the 2020 Corona crash. This area in the chart is mad important. This is the S&P 500, and we're around 3250, around that range. We want to see if we're going to come back to that range. Let's pull that back up, right? Like, let's say that this scenario actually happens. Something like this, right? There's going to be bounce opportunities along the way, no doubt. But this is key. Do we come back into this zone and stay around there, and that's truly the bottom? We'll be looking for major volume coming in, and we'll also be looking for reversal patterns on many different stocks. And we're going to try to see if growth names will get a bounce out of there, right? We got to see what names that got affected the most during not the corona, but this 2022 financial crisis, we can call it. I don't know. But let's say there's going to be a bunch of stocks that get hit the worst. Those are going to probably have the biggest bounces. So that's what we're going to want to pay attention to. So this is how I'm looking at it from a technical perspective. And all the ranting I just did was pretty much trying to explain my mindset and what I think could potentially happen, right? So that's kind of the breakdown this day. And today is, we'll say it's the 18th. Hard. So that's the breakdown for the 18th. Peace, guys.